welcome to Real Talk with Carin Miller. I've got Zach Ligon here with me this week from Community One Insurance. Thanks for joining me this week, Zach.
Yeah, thank you for having me.
Yeah, so tell me a little bit about Community One Insurance and how you got started in the insurance industry.
Yeah, absolutely. Community One Insurance is a full-service independent insurance agency serving primarily North and South Carolina, but also surrounding states as well. I got into the insurance industry earlier than most. I went to Appalachian State, where I believe Karen's daughter's going, Go App, and actually double majored in finance and banking and risk management and insurance.
Okay.
And so kind of a rare breed in the insurance world to actually have an insurance degree.
Yeah, so that was actually what your plan was all along.
Yeah, it kind of shifted to that towards the end. Appalachian has a really good insurance program. The leadership's great, the support's great, so it just pushed me in that direction out of college and never turned back.
Nice. So how long have you been in the insurance industry?
I would say, about going on 15 years.
Okay.
Started in service roles, did some sales roles, some leadership roles. I've really been in all aspects of the industry, and now starting Community One Insurance, February will be our 3-year anniversary.
Cool. And so 3 years with Community One Insurance, and you've got a team of agents, right?
Yeah. There's, including me, there's 5 agents. We have one dedicated service agent, Brianna.
Yeah.
And then Jana, Matthew, Elizabeth, and myself are all focused on sales and service and just building that personal touch with our clients, family, and friends.
Nice. So if you had to explain home insurance in like the simplest form possible, like dumb it down for me a little bit, explain the general idea of how home insurance works.
Yeah. So the first thing is every home is different. So we look at the home based on the elements of that particular product, the year it was built, the quality of it, if it's more of a track home, if it's a custom home, a designer grade home, the square footage, the exterior construction, number of garage, those type things.
Yeah.
And those help us determine a replacement value. And then that's what the home is insured on. And then there's specific endorsements like replacement cost on the dwelling, replacement cost on your home, water backup, ID theft, some important elements that go along with that. Then it kind of shifts to the individual buying the home. We go with what we feel they need from a replacement cost standpoint with those specific endorsements. We present that to the individual that's buying the home, and then we kind of tailor that, whether if it's taking off things, adding things around that individual buying that particular property.
Gotcha. So when you're talking about the replacement costs, like as you know, during COVID 2020 through 2022, replacement costs and repairs and things like that, their prices went up exponentially.
Yep.
So is that something that you guys come in and kind of audit with your customers each year to make sure that they've got enough coverage?
Absolutely. So there's 2 elements to that, and one is there's an inflation guard built into every home policy that tries to keep up with inflation. But with the rate of inflation and supply, demand, cost, material, labor going up so much where it cost 20-30% more to build a home now than it did 3 or 4 years ago.
Right.
Recent policies have not been able to keep up with that. So we do go in and evaluate that based on today's values and today's cost and make suggestions to the insured, whether if it's at purchase or 5 years down the road.
So that's also why if a homeowner is doing renovations or upgrades to their home, that's a good time to reach out to you then also, or to their agent, and let them know, hey, we've done these upgrades, so that you can adjust the replacement cost.
Anytime there's a change, an update, it's different depending on the carrier, but whether if it's updating the quality or if it's adding square footage or restructuring, you always want to make sure to update it to make sure the proper policy is in place and then the proper value is there once that project's completed.
Gotcha. That makes sense. So as far as the Charlotte area, is there any coverage or anything specific to maybe the Charlotte or North Carolina area that you see as far as coverage or what homeowners should have?
Yeah, I would say nothing really specific to Charlotte. What makes Charlotte unique in comparison to other cities and areas is that we've got a variety of different exposures from 2 hours from the mountains or 3 hours from the coast. So being independent, we have markets, whether if you're in the city, in the suburbs, in the mountains, at the beach, we've got good markets depending on what location and area that you're in. So that kind of sets Charlotte out a lot. We have clients that have a primary home in Charlotte, but a secondary home at the coast or secondary home at the lake, which there's lakes all around Charlotte.
Right.
So having those carriers to be able to keep it all in-house and help the individual whatever their needs are, that makes Charlotte a little bit unique because there's a lot of that different and unique exposures.
Right. Okay. That makes sense. So As far as, let's talk about first-time home buyers,
Yeah.
right? So everything is kind of new to them. They're kind of learning as they go through the process. What are the top 3 things that maybe first-time home buyers should look at when they're looking at their insurance coverage?
First off, I would say start early. Whenever they're looking, if they get under contract, start it early in the process.
Yeah.
And I would say the second and probably the most important item is just, and I would say this goes along with you as the real estate agent, with whomever doing the mortgage, finding someone you know and trust that can all work together, that can be honest. That's our business model. We are very honest. We're upfront. Because of our carriers, we're extremely competitive on coverage, quality, and pricing. But if a client comes to me and it's something that we can't offer, we'll be honest and upfront with them about that. And we don't want to lose the business, but we value the relationship and the quality over that one piece of business. And we might get their business 2 or 3 years down the road because of that honesty to those clients.
Yeah. So with some of the items for first-time home buyers to look at, you mentioned, getting in early as soon as you start the home buying process. One of the things that I've started working with a lot of my clients on is hurricane season.
Yep.
I think a lot of people don't realize that if they don't have that insurance policy bound, and let's say there's a named storm come closing, then they're not going to be able to close. And I think that kind of goes back to, don't wait until you're about to close to get your policy. Can you talk a little bit more about how that can affect people? And I think a lot of people assume it's just the coastal areas that applies to, but that's not necessarily the case, right?
Nope, it's called binding authority with all the insurance companies. And as a named storm approaches, as they develop more intel on that storm and the path that it's going to take and the severity of the storm from projections, they will start to shut down counties like from the coast inland. Sometimes they'll just do east of 95 is shut down, and then sometimes they'll start to do counties coming inland all the way into Mecklenburg County. So if you have a home policy or a home quote in place and you're buying a home and that storm comes in and they shut the market down,
right,
you cannot bind coverage. But let's say that a storm's coming in and you're closing in 2 weeks, you can bind it now, and then if they restrict binding authority, you're already bound, so you're okay.
Right.
But when that comes in, they restrict binding authority, there's not much you can do until after the storm. Given that there's no damage, they'll lift that restriction up, and then you can get it in place, but it could very well delay your closing if you don't do it ahead of time.
Yeah, I've had one, not my particular clients, but on my listings had one where a buyer maybe just did not try to get their insurance until 2 days before closing. We had like a tropical storm coming into the coast.
We try to be proactive in those scenarios with the buyers and say, hey, look, it's storm season. Whether if it's us or someone else, you need to lock this in sooner than later to avoid a situation like that.
So moving on, as far as like, nobody likes to pay their homeowners insurance fees everywhere, especially people in Florida. But what would you say are some practical tips for maybe reducing your cost, but still making sure that you've got adequate coverage for your home?
Yeah, well, so kind of a 2-part answer on that. For one, the market right now, in the 15 years I've been in insurance, is probably the hardest insurance market I've ever seen. And by hard market, I mean rates are going up,
right,
and underwriting guidelines are tightening. So from a cost standpoint, that hurts. It hurts me, you, everyone else.
Yeah.
We're competitive because we have a lot of carriers, so we can stay ahead of that. So the best way to really manage that cost is just looking at different carriers, looking at different options, whether if it's an old roof, a new roof, if the heating's been updated. Look at different deductible options. Sometimes the difference between $1,000 and a $2,500 deductible can be hundreds and hundreds of dollars on your home insurance. Looking at particular endorsements, limits, looking at credits, like if you have alarm credit, if you have monitored cameras. Carriers are starting to be even more due diligent about that with the little water protection valves that you can put on, so if a pipe bursts and the water flow changes, it'll shut off all of your water.
I'm definitely seeing a lot more of that too.
Yeah, so things like that, just being proactive, having those conversations with the client and saying, I recommend this, 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 and this, but if you need to get the cost down, we can help in this way.
So as far as home trends, like the industry right now is going through a lot of transition. What kind of emerging trends are you seeing in the homeowners insurance side? So
the insurance market as a whole is an extremely hard market right now, and it goes through a cycle of a soft market and a hard market, and this is probably the hardest market I've ever seen. So guidelines are extremely tight and rates are going up. Hopefully, given hurricane season and frequency and severity of claims this year, if it's good, I would say a stable market with 3 to 5% increase would be absolute best case scenario. I think that's a stretch. So I think we'll see some increase still, whereas in the past, this past year, I've been seeing on average anywhere from 15 to even up to 30% increase, which is which is insane.
Yeah.
Historically, it's been 3 to 5%, worst case 10%, and we can usually move it and find something better. But now we're seeing anywhere from 10 to almost 30%, and sometimes it's the best option for that client.
Gotcha.
So if we could have a mild storm season and see the rate and the market kind of flat or a little bit, I would call that a win.
So you think it'll balance out a little bit more?
I hope. It depends on the storm season. That's the thing about insurance. It's unknown. If there's if it's a bad hurricane season this year, we'll see the same type increase and challenges that we're dealing with now.
Gotcha. Cool. So tell me about some misunderstandings that homeowners often have with homeowners insurance.
Absolutely. So one of the biggest misconceptions when someone's buying a new home in regards to the purchase price, the loan amount, and even the appraisal value is that that's the same as the dwelling, the home replacement value. Totally wrong. So the purchase price, the loan amount, appraisal values, those all were, even the tax value, are kind of one side of it.
Right.
We base the replacement cost on the home itself. It doesn't account for the land, the location. So obviously a more desirable area, the purchase price is going to be higher because the land costs more.
Sure.
Versus if you're way out in the country, the land's going to cost less. But that same home would cost the same to rebuild, whether if it's here or here. So that's one of the biggest misconceptions when we send a proposal. Let's say the dwelling value is $300,000 and the loan amount's $400,000. Like, hey, we're underinsured $100,000. This is the loan amount. We have to get that up. Well, no, here's why this is the replacement cost based on this, and this. Doesn't account for the land, the location, those type things. I think the biggest way that I try to explain for people to understand that is, let's say that same scenario, the dwelling value of $300,000 and the loan amount of $400,000. If that buyer decided to put $200,000 more down, the loan value would only be $200,000, but the replacement cost would not change.
Gotcha. Okay.
And so that's a good way. And then another way is, if you, in this desirable area that it costs $300,000 to replace, if you picked it up and moved it way out in the country, the purchase price is going to be a lot less, but that dwelling value would still be the same. So that's a big misconception that we see, is the replacement cost is the same as the loan amount or the purchase price.
Gotcha. So it's almost like you have to look at what would it cost in a very basic standpoint.
Yep.
If the house burnt down tomorrow, we only really care about what it costs to rebuild it. Or if there was a house fire that caused a problem with the kitchen, we're really just like, what is the cost to replace the kitchen? And
the cost to replace it today. Not 5 years ago, not 10 years from now, but today. What is the replacement value today?
Gotcha. So tell me, there's all kinds of things that your homeowner's insurance can protect you from. Do you have any really great stories where maybe you had a client that, gosh, if they had not had the right coverage, they would have just totally been screwed? Yeah,
absolutely. So this is kind of a double-ended story where it was a particular client who had a water backup claim. And so the sewage line from the street to their home backed up. There was a root that was in the line, and it caused about $20,000 worth of damage. So they did have the water backup endorsement. So the particular carrier in this case was Safeco, which is part of the Liberty Mutual family of companies. And they came in, minus the deductible, they replaced all the damage. But that person still needs to go in and replace that line from the home to the road.
Right.
Because if they don't, it's just going to happen again. It backed up because of a root. And there's a particular endorsement called service line coverage that we, thank goodness, and we put it on every policy and someone specifically, unless they specifically ask us to remove it, but we had that particular coverage. So Safeco also paid right at $10,000 for them to dig down and replace that line. Had they not had that one endorsement, no insurance company would pay for that particular line replacement. They would only pay for the damage to the floor if they have that endorsement, the water backup.
Right.
So in this particular case, two endorsements that a lot of people don't have, a lot of people don't know about, or might choose to remove: water backup and service line coverage, save this client upwards of $25,000 to $30,000.
Wow. Yeah, because that service line is way more expensive to have to replace or repair than the flooring.
And that's, neither one of those endorsements are required, and service line is newer. It's probably been around 3 or 4 years. So, and some carriers don't offer it. A lot do now, most do now, but it's super important, and it's very inexpensive. It's usually about $25 or $30 for the year to add as an endorsement on your home policy.
Wow. So that's definitely a must.
Yeah, that's
a must have. It's kind of a no-brainer.
Well, going back to the key of a first-time home buyer, even someone that's bought 15 homes, is having a trusted insurance advisor. A lot of people, they'll Google insurance companies, Safeco, Travelers, Liberty Mutual, whoever, and you'll find bad reviews on every insurance company, which is a sad part of the industry, but it's true.
Things happen.
So when it results in a bad review, most of the time, like that example I just gave, the water backup and the service line coverage, had we not had those endorsements for the client who had a great experience, that would have been a terrible experience because they would have been on their own on those damages out of pocket, which would have resulted in a bad review against Safeco and Liberty Mutual. But truth be told, had we not offered the right coverages and explained what they did and didn't have, it would have turned that experience around to a positive experience.
Yeah, so I think that this is probably where it goes back to, like, just getting an online quote from a company really just isn't enough. You've got to speak to someone local and trusted to make sure you're getting all the coverage, because I'm assuming that with some of the online companies, you get a quote and you're like, woo, great, this is cheap, let me go. And you may not have the out of the box type thinking that you have when you're with a trusted local agent.
And we value price. We know price is important too, but the problem with online quotes is you see that price and it's terrific. But I'll ask the client, if you'll send that to me, I'll point out the differences. And like, yeah, the price is $150 less for the year, but you don't have this, and this. And for me, $150 for the year to have that water backup coverage that saved them $25,000, $30,000.
Yeah, that extra peace of mind.
Yeah, it's a peace of mind. And at the end of the day, that $150 wasn't going to change their day-to-day living and finances. So they're better protected in the event of a larger scale loss.
Yeah, that makes sense. So tell me some of the benefits of bundling your homeowners maybe with, let's say, your auto. So for example, you guys handle my family's service. We have our auto and our home bundled together. We have a teenager in the house and two more that are about to be driving soon. So that was a big change for us, having to absorb auto insurance on a teenager. But from what I've heard when I talk to my friends, like, ours is actually, we have great coverage, but it's actually a little bit lower price. And I think that's one of the great things when you go with a company like you guys, where you can kind of shop a lot of different policies and make sure you're getting the right coverage. Because I know even with our auto, like, we changed policies when she turned, or we changed companies or providers when she turned 16 and got a car, because it offered overall a better policy. So tell me how that kind of works for the general consumer.
So two answers to that question. One, with us being independent, we have choices between carriers. Every carrier kind of has their niche market of what they're looking for, whether it's single, married, kids, rental properties, boat, motorcycle, whatever the case is. So by us being able to go out and shop that based on your needs, young drivers, home, vehicles, umbrella, whatever the case is, we can find a good fit and in turn deliver better service coverage and pricing. And then the second part of that is bundling it together. There's so many benefits of bundling it together. One, price. When you package it together, you get multi-policy discounts. By combining all the vehicles versus having separate policies for your kids, you'll get multi-vehicle discounts. There's carriers with young kids that have good grades, so we can get a copy of the transcript and apply that.
We did that. That was nice.
If they're away at college and they keep a car home, and college is, I believe it's over 100 miles, there's a distant student discount.
Oh, great. So my daughter's not taking her car her freshman year.
So different things like that different carriers offer that can kind of put us above the curve and make those situations a little bit more competitive for you.
Nice. So if there's just one piece of advice, just kind of wrapping up here, like, if there was one recommendation to people who are either homeowners or looking to purchase, what would you say, like, your one big takeaway as far as the one thing to do when you're looking to make a change?
I would say when it goes to insurance, and this is a pretty broad answer, but it goes back to that just trusted advisor, someone that has your interest in mind. And that's just going to do the right thing and start early in the process, because things happen, things change. But if you do your due diligence early, you're not going to delay things. Go over the coverages, ask questions, don't be shy about it. I want you to know, whenever that home policy is in place, I want you to know exactly what coverages that you have. And that way, if there's ever a loss, you're not going to be panicked. Oh, do I have wind and hail coverage? Oh, do I have water backup? You know exactly what you have. And then the flip side too, like, if you decide, you know what, I want to save $40 a year, take off water backup, we would strongly advise against that, but it's your policy.
So but at that point, you'd know what you're getting yourself into.
Yeah. So if you have that type claim, then that's not going to be covered. You're going to be upset with yourself if you took it off. But just having that known, very clear picture of what you do have and what you don't have is our goal, so people understand their policies and understand what they're paying for.
Nice. Well, thanks for joining me today and sitting down talking homeowners insurance. Again, this is Zach Ligon with Community One Insurance in Matthews, North Carolina. And if you check the comments, you will see his contact information and a link to their website.
Yeah, thank you for having us. We enjoyed this.
Thank you. Have a good one.
Thank you.